Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT methodology and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, into the action we go today on this Monday, March 3rd, 2014. Wide selling across the board, and again, this is on the back of Russia's incursion into Crimea. And again, the key here is just to understand the implications. I mean, you're talking not about military action from the U.S. or Europe against Russia. I mean, that's not even close to being on the table. But the key here is to understand that you're dealing with potential trade sanctions, which, if they're imposed on Russia, will ultimately have an impact on the economies in Europe as well as the United States. So that's really why you're seeing this more of a drop in the markets. And again, it's a pretty nice drop. You have the S&P down 17 points, Dow down 196, NASDAQ down 43, basically 1% across the board. But that's really the reason why you're seeing the sell-off in the markets. Now, again, you have to chuckle, and I hate to chuckle because I know a lot of amateurs just don't know what they're doing, and they kind of get in the markets just before it falls. But if you take a look at the market late last week, it was just like a classic kind of setup for this, because we saw all week last week the markets hammering on that 1850 level, right? So they hammered on 1850 Monday, Tuesday, Wednesday. They were above it intraday, then got pushed down by the end of the day, closing back below the key level on the S&P. Then on Thursday, in the last 10 minutes of the day, there was a buy program which just surged the markets above that 1850 level to close. Well, then the media went off on a frenzy of, oh, the S&P new all-time high, bullish, bullish, bullish. The little investor responds by buying in Friday morning. All right, S&P all-time high, this is a breakout, blah, 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 blah. They buy in, folks. And this is where the little investor always gets screwed, paying the high prices just before something happens. And again, markets were priced for perfection. What pricing for perfection means is that you literally have no negatives out there that are even remotely possible in the eyes of investors who are buying the market. It's at the all-time highs. Things are great. Nothing could ever go wrong. Well, guess what? Something always goes wrong. There's always some sort of hiccup. And that's what we saw Friday afternoon here, where the markets took a dive to the downside. All right, and then they recovered a little bit to close up just off those lows. But then the selling comes in today. We dumped out in a major way. We actually came right down here to a major gap fill before getting a little bit of a bounce. And just look at this gap fill, folks. All right, it was also a fib level, a 25% retrace level on the market, and this was your buying opportunity right there. Very clear. You have a gap fill, 25 fib level right there, and sure enough, the market's got a great bounce off of it. So there's been some great trading opportunities today. I've taken quite a few scalps myself, put some nice money into my pocket, and again, it's all about just noticing what the market's doing. And I think for swing traders, hopefully a lesson is learned on buying Friday before the flush today. And again, just think about the average investor who probably, combined put billions of dollars in the market Friday morning, which sent it up. And this is exactly why it went up on Friday, because shorts were covering. People were saying, oh, the market broke out. People that don't know what they're doing. And sure enough, they were, covering, which is buying the market overall, surging it up. And again, that's exactly what the institutions want, as they just sell into it. This is all distribution right up here. All distribution coming in, and even here a little bit. But then the markets collapse. Then you get a little snapback, and then the downside today. So just the normal market. I mean, this is exactly what happens every single day. It shouldn't be a surprise to really anyone who's been around and learned from us at InTheMoneyStocks.com. But you have to be aware of this. I mean, it just so happens I had VXX, which is the ETF that measures volatility. And if you bring up the VXX chart here, we unloaded it this here. Take a look at the move late Friday and into this morning, and we just took our profits. So made a nice 6% move or so on that, enjoying that gain quite a bit. We're also short some stocks like Facebook. FB down $1.23 today. We're basically $3 in the money on this, which is a very nice gain just in the last few days. GILD I'm short as well. That's down $1.68. Great fall on that. We're actually about $3 in the money on this one as well. So, the key is to understand and read between the lines. If you're going to go by what the media says, you're going to be wrong. All right, the media has a reason why they're pushing certain agendas. They're going to be, talking about this whole Russian situation and going to the worst case scenarios because they need viewers to watch their shows so they get, higher value for their advertising. All right, and when you have a million versus 10 million watching your show, the commercials that are in that show are going to be valued at much higher when the 10 million viewership is there. That's the goal there. So they're going to bring on every analyst to say, "Oh, well, this could turn into this situation. This could be dramatic. This could escalate, etc." And that's where you get the response. So now today you're getting that fear response in the market, and I think not so much in the markets as they're still overbought, but I think the Russian ETF, the RSX, is actually getting semi-interesting. I'm not going to be a buyer yet. I actually just wrote an article about this, but if this drops another 10% here, then you start getting into territory where you start getting very interested. Okay, and again, you can see the RSX is the ETF that tracks the Russian market, and you could set it was up at $30 just a couple months ago, basically last October, November, and it's now down currently around 23. So you're already down significantly. If this drops another 10, 15%, then that's where the fear gets overdone, and then you start looking on the long side. And this is just kind of a back and forth. You just have to know when the markets are overdone in one way, like the SPY or the S&P on Friday, versus the markets being overdone in this case, not yet on Russia, but getting close. And ultimately, there'll be some sort of, there's too much to lose these days. I mean, we're not in the ancient days where one ruler could just, go in and do everything like that, because there's the global economies are so intertwined, and there's so many other wealthy people in these societies that have so much influence that if something like that were to go on and the amount of money, billions and billions, if not trillions, get lost, there's going to be a major flashback on that ruler for trying to do these type of things. So, believe it or not, that's really where you'll see this resolution, in my opinion, by wealthy businessmen starting to see that their pockets are getting thinner and thinner, and then saying, wait a minute, this is no good. I was making, 10 million or 100 million every year until this started, and now I'm actually only making 5 million, and this is horrible, and then they're going to start putting pressure on Putin and so forth. So that'll probably be the outcome, and some resolution should come to it. Is there a small chance that shots could ring out? Yeah, there could be, but I think it would be short-lived, and ultimately that would be a buying opportunity, in my opinion, if that did happen. So that's where we are right now on that. Some stocks to take a look at. We have Apple here. Apple's trading basically flat on the day, which is a strong signal. And again, Apple's showing some signs of life here, just down about $1 on the day. Amazon down about $4. Stock still bearish on the daily chart. Nice little pullback today. JCPenney should be noted here, as it is up today about 4%. That stock continues to be one of my favorites, although obviously you're not a buyer up here. But you have to think that this is going to go higher. I think short term, you see this little gap fill right here, which is at the 825 level. You got to be going back to that 825 level at least. Then you'll have another resistance right here. Okay, and again, just there it is, and sure enough, this would be your next one right here, right around the 1035 level or so. So these are your next resistance levels, and most likely you'll at least hit gap fill. Then I would say you start to make a bull flag pull back before your next leg up. And I think this actually, believe it or not, Goldman Sachs did the secondary on JCPenney way back. I mean, it wasn't that far back, but like 6 months ago or so. And that was right, I think it was right over here, kind of in this range. Maybe even right here, and that was when I think they did it for like $9.65 a share. So you got to think that the stock price, because Goldman's involved there, will get back to that $9 to $10 level. Now, am I a buyer here? No, I'm not a buyer. But if you give me a bull flag and a nice consolidation, small pullback, yes, I would be a buyer then of JCPenney. Still a lot of shorts in that betting against it, and there will be some opportunities there in the coming weeks and months. So again, this is just information that I give to my members here at themoneystocks.com, and ultimately the trade alerts are the trade alerts, and they're there for the taking, and to continue to give us some good profits, and markets again continuing to show some weakness today. If we flip back to the SPY, let's bring back the SPY here and just punch in the right symbol there. There we go. And again, SPY down $1.65 right now. Let me flip back to the intraday chart. Let's see if there's anything going on before we come to a close on this video. And really what you're seeing here on the short term is just inside consolidation above the 20. So this is actually, as long as you stay above the 20, this is bullish. If you break and close, and a closing candle must go below the 10-minute here, or excuse me, the 20 MA, then you actually could see the lows of the day. So you might get some selling end of day as people don't want to hold overnight. Russia apparently gave an ultimatum to the troops in the Ukrainian troops in Crimea to abandon post and get out of there or something like that, or they would be in trouble or whatever, But at this stage, who knows if that comes to fruition. But the point is, you could see a little selling ahead of that into the close. We'll just continue to watch price pattern time. And ultimately, I've positioned myself and our members in the perfect way, in my opinion. I mean, there was literally a market that was priced for perfection, and so I just, over the last week or so, just continue to slowly accumulate shorts, and now they're paying us, and they'll continue to pay us. Even you'll get a bounce here and there, sure enough, by the dip mentality, but they'll continue to pay us pretty handsomely. Okay? So that's what's going on there, folks. And again, on this market, we'll see where it ends the day. But as always, come join us here at InTheMoneyStocks.com and just start profiting with the pros. Be on the right side of the trade. Never get caught on the wrong side. If you were thinking about buying on Friday, you should reevaluate your strategies. That's for damn sure. Talk to you soon. Take care.